So if you're ready, I'm going to start.
I'm good.
Okay, I'm going to stare at the camera, look strange. Hello, hello, hello. This is Warren Redlich. I'm here with James Stevenson. We are going to be talking about Tesla. James is a Tesla bull. I am considered by some to be a Tesla bull. There's a question about who's a bigger bull. I think we're actually different. We have different perspectives on why we're bulls. James did a 69 tweet thread on Twitter today or yesterday, detailing his analysis about where he sees Tesla going. And I was particularly struck by his profit numbers in the short run and his delivery numbers further out in, say, 2023. So we're going to talk about that. We're going to talk about more. So I'm going to test his theories. And then he's challenged my presentation because I don't normally do share screens with Zoom. I normally do my videos differently. So he's going to share his screens at times. I'm going to try to share screens at times. So we'll see how that goes. Before we get started, I want to thank the Vasa Law Firm in Sweden and all my Patreon supporters. Check the links below for support this channel on Patreon, t-shirts and water bottle and things like that at elonbits.com. So, James, would you please tell everyone a little bit about yourself?
Sure. Yeah, I'm James Stevenson. I am a long-term Tesla shareholder and bought my Tesla Model 3 back in 2018. Man, I just launched right into it, didn't I? First, I should say thank you, Warren, for inviting me on your show. I appreciate the invitation.
Honored to have you.
Nice of you to have me. I appreciate the opportunity to go into more of a long-form explanation of the forecast than I typically do on Twitter with just tweets, right? So yeah, I've been a financial analyst for my whole career by trade. So I've been working on planning and budgeting and forecasting and explaining variances to forecast for my whole career. So spreadsheets come pretty naturally to me at this point. And yeah, I just got really interested in Tesla and in Elon Musk and really believe in what he's trying to do for the world and think that the electric vehicle transition is long overdue. And I'm glad that somebody like him was around to hasten its arrival and encourage everyone else to do likewise.
Yeah, he's really driving things in a lot of fields. So
yeah,
let me just share screen.
Okay.
I'm going to do my share screen, see how this goes. Folks, I'm not that good at this Zoom thing, so we'll see. Wait. Uh-oh.
Or I can, either one of us.
I got it.
Okay.
So let's try it. So hopefully people can see this. This is the thread that started this. James did a tweet, 69 tweet thread. This is a summary. There's 16 tweets with pretty charts, and then he's got a lot more detail in it. I wanted to ask you first, James, about this first tweet. There's a picture in the first tweet. Let's see if I can pull it up. Maybe it's not this. I think it's this. Is this from the first tweet?
It is. Yeah.
Okay.
Yeah.
So
yeah.
So in this tweet, you've got 2020 and 2021. I've got the second 2 quarters of 2020 and 2021.
Yep.
And then the 4 quarters of 2020. Sorry, the last 2 quarters of 2020 and the 4 quarters of 2021. For those who are watching, the grade section is James' projections for what's going to happen in 2021. The white section is what has happened. And I've got red boxes around adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization.
Yes.
And then I've got blue boxes around GAAP net income or earnings. So, for those who are looking on the left side, you can see quarters 3, 4, and quarter 1. Tesla had adjusted EBITDA, which is a form of income. It's the income that's used to determine Elon's stock compensation. That has been consistently around $1.8 billion for the last 3 quarters. And James, going forward into 2021, shows those numbers going up dramatically. So before the red box, you see nearly $3 billion in EBITDA, then 3.6 billion, then 4.3 billion. and this takes GAAP net income, which is that stated in terms of share price, or is that in billions? That's probably in billions of dollars, right?
So yeah, these are the non-GAAP. There is GAAP earnings later in the forecast, but
Right. But I see,
uh,
but anyway, you see that GAAP net income in the fourth quarter shoots up really dramatically to
yep,
basically, I think that's $4 billion, if I'm not mistaken. I don't think it's
that is $4
399.
billion.
Yeah.
Yeah. Yep.
So I am very optimistic about Tesla in the long term.
I've heard you say some optimistic things before about full self-driving in particular,
Yeah,
but yeah,
I'm a little surprised about this projection so soon, reaching basically $4 billion in profit in quarter four. I'm gonna take it off share screen for now so we can.
no, you can leave it for a second.
I'll leave it.
So, yeah,
Okay.
to help people understand. So if I were looking at this forecast unaware of what's in it, I would also question it and say, hey, that looks wrong. How can the adjusted EBITDA in Q4 be only 0.7 billion higher, while the GAAP net income at the bottom line has somehow gone more than $2 billion higher from Q3 to Q4? That doesn't look right.
Right.
And the answer is found right below the red box in Q4. The parentheses there around the 0.128 indicates that's a negative number. Now, how on earth can your interest, taxes, depreciation, and amortization in total be a negative number? Well, under normal circumstances, it wouldn't be able to. And I certainly am not projecting that from Q4 onwards, that'll be sustainable and ongoing. That is a one-time favorability. So what happens when you lose money as a business is that you don't have to pay US federal income tax because you did not make a profit. So when companies lose money, the IRS does those companies a solid and says, hey, tell you what, next year, if you're profitable, you don't have to pay taxes on the whole thing. You can, like rollover minutes on a cell phone plan, you can accumulate the deficit or the losses that your company has had to date and save those up to whatever future year your company becomes profitable, and then apply those losses against your profits to reduce your taxable income. Now, the way GAAP treats this is hard to understand, like many GAAP treatments for accounting purposes, but I'll spare the gory details and say you're allowed to claim 80% of the amount of accumulated losses to date. And Tesla reports this in the 10K. You have to look for it. You have to know what a valuation allowance is. You can search for that in the 10K and find it. But they don't tell you when they're going to exercise their get out of jail free card, to use a Monopoly board game expression. But you're allowed to reduce your taxable income, and you can claim 80% of that amount in the first year and the other 20% in the next year. And there's no reason you would not claim up to the maximum of 80%. You would take it if the IRS gives it to you. So $1.6 billion hits on the tax expense line of the income statement in Q4, and we can see that later on in the presentation. But that'll be a one-time deal and non-recurring, and the Wall Street analysts will back it out. So if you don't like the $4 billion in Q4, subtract 1.6 billion from that, and you'll get 2.4 billion, and that's what I'm forecasting for the earnings after that deferred tax asset claim is netted out.
Okay, so that explains it a little bit, but Q3, that then makes Q4 smaller than Q3. So
No,
how does Q3
bigger.
how does Q3 double EBITDA against Q1?
Well, so the negative number is below the adjusted EBITDA line. So the adjusted EBITDA line I highlighted on here because I think it's the most useful profitability metric for us to look at. Not only is it the one that Elon's compensation plan is based on to avoid a circular error in the calculation of his expense associated with stock-based compensation, It's also just got less noise in it, like that tax expense. That's not really a controllable item that management can influence, right? Your tax bill is kind of your tax bill.
Oh, I'm sorry. You're saying the gap net income you dropped 1.6 billion from.
Yes, 1.6
But
billion from the 3.99. I rounded it up to
but
four.
I'm still stuck
Yeah.
on how you get to 4.3 billion in EBITDA in Q4,
Yeah. Well,
up from 1 point, we've been doing 1.8 billion in EBITDA for 3 quarters in a
sure.
row, and all of a sudden we're jumping up to a new level starting in Q2.
Yeah.
What's happening that allows Tesla to jump its EBITDA, which I agree with you is a more understandable profit line than gap net income? What
Yeah.
allows Tesla to jump that profit level up?
Well, there's a lot working in Tesla's favor. So if you want to break down the cause of change on it, the volume is favorable. So Tesla is selling more vehicles than they ever have before. So record high vehicle delivery numbers for the automotive segment. Also, the mix is changing of those vehicles. So more of the vehicles are being produced in the China Shanghai Gigafactory now than ever before. And that trend is going to continue into the future. It's less expensive to make vehicles in China than it is in California by a lot. It's not close. The labor costs in California, especially in the Bay Area, are very high. And the cost of expediting stuff to San Francisco is very high. Not a whole lot of parts for vehicles are made in San Francisco, California. You have to ship them in from all over the world, right? In China, there's a lot of local sourcing. China is very good at making stuff. And so Tesla has done a really good job of increasing the amount of locally sourced parts that go into those vehicles. That drives down the cost substantially. So you have that, you have rate, you have increasing take rate over time on things like full self-driving options. As more features roll out and more people see how cool full self-driving is, more of them are going to buy it, right? So that take rate increases the revenue per vehicle, and it comes with almost no variable cost. When you sell somebody a car that has full self-driving software versus a car that doesn't, it doesn't cost you anymore at all. So you're just getting $10,000 more worth of profit every time that happens. So the more often that happens, the more profitable the company gets. You can't see any of those things happening on this summary page, which is why I've included everything else that's behind it in the thread.
So, I think we also see, compared to Q1, we're going to see significant increase in sales of Model S and Model X, especially go forward. That's going to drive up the average selling price. It seems like Tesla is at least slowly increasing prices of Model Y and Model 3, Model Y in particular. And then just with forgetting about FSD for a second. And then my gut is that the vehicles that come out of Giga Berlin and Giga Texas in Q4 will be priced high as well. That the first Model Ys coming out of Giga Berlin and Giga Texas will be premium models.
It makes sense when you first start ramping to make the vehicles people want to pay the most for first. When you're at low volume, you haven't reached your economies of scale yet. So if you want the factory to get profitable faster, you make the highest optioned vehicles first. But yeah, you hit on one a little from Q1 to Q2. Back in Q1, a lot of people were buying standard range Model Ys. Tesla took that off the menu. You can't get standard range Model Y anymore. That change sounds minor, but it has a huge impact on profitability because the standard range Model Y was like a $45,000 vehicle or something. And the long range is well into the 50s, 51 or 52 or something. I've got it in the spreadsheet, so I don't have to remember it. And I forecast at a very detailed level so that I can't miss something like that. I used to do a really high level estimate years ago where I would just kind of eyeball, the columns that are white on this page and say, well, I think it'll go up by this amount. And I missed by more than I liked or more than I was happy with, and realized only after the earnings call, oh, I would have figured that out if I had done a more detailed model. if I had had to force myself to make assumptions for every model, for every vehicle, for every option, for every price point that changed, for every cost improvement, um, I wouldn't have made that mistake. I would have had a better forecast. And some of my forecasts have been over and some have been under, and none of them have been right about all the numbers. Uh, the first rule of forecasting is whatever you forecast, it will be wrong. So I make no guarantees that these numbers are going to happen. If I had to make you a guarantee, it would be that they will definitely not all happen. Uh, but I do try to do as good a job as I can coming up with a very detailed look and choosing for my input assumptions the midpoint of a likely range of outcomes for every variable that's required. You can't make a forecast without making some assumptions. If there were no assumptions in it, it would be called a report, not a forecast, right?
Yeah. So I actually want to make a key detail here about how James and I differ. James said that he used to do high level approaches, and then he got detailed and he goes deep into detail. People who follow my channel know I do very high level at a completely different angle. My analysis typically starts with something like how many batteries will Tesla have in a given year, and how much revenue do they make per kilowatt hour, per gigawatt hour, and that's how I translate it. I almost never get into these. This is what, to me, this is the weeds. This is I think Gali from Hyperchange used to do this a lot too. This really detailed analysis of the sheets of the, what do you call it, the financial statements. And I look at them, I read them. I read every Tesla financial statement, but I don't think I don't feel comfortable doing the deep in the weeds analysis that you do. I'm really glad you do it. I think it's great that people get to see different angles. I just wanted people to appreciate the difference, that I just come at it from a completely different angle, but I love seeing this angle as well.
Sure,
So,
yeah, you're in the majority too, by the way, Warren. Most people side with you that it's a much better use of their time to do high level and move on with their day. I'm one of the few weirdos who love spreadsheets so much that I'll spend over 1,000 rows forecasting Tesla's
yeah,
income statement.
I do spreadsheets, but not like you. And I'm impressed. I mean, this is a skill. This
I
is
am
an
a
important
spreadsheet
skill.
enthusiast. Yeah.
Okay, so
for sure.
let me skip out of here and go to a different. This is a different part. One of the other tweets. Can you see
Yeah,
this, James? So
I
this
can.
is your forecast going forward for this. Those who don't follow this, and I don't know, can people see my mouse?
I can.
We're starting in Q1 2018, and we see quarterly deliveries and quarterly production, which are basically the same. So the first quarter of where Tesla hit about 100,000 vehicles was maybe Q2 of 2019. And then we see the curve start to go steep. And Q1 2021 was the last quarter we hit 180,000. And James is projecting this curve is going to go up fairly steeply to Q4 of 2023. James has Tesla delivering, I think that's 650,000 or so vehicles. Is that
a quarter by the end of 2023?
in a quarter?
Yeah.
So, and I'll just my high level, which is, again, there's a difference here. And I think you and I are fairly close on 2021. I think your number is somewhere around 900 total for the year. 2021 is somewhere over 900,000.
It is.
I think it's 920, 930, something like that.
I'll
I
get you
don't.
the number exactly.
Yeah.
It's 917,113 vehicles. Okay. Mark it down.
So my ballpark. Yeah, and again, I don't do the detailed level. I figure, okay, they did 180 or so in the first quarter. I think they're going to grow to, like, let's say if they do 220 in the second quarter, that gets you to 400. And then the question is, well, what are they going to do in the second half of the year? They're pretty clearly going to outperform. Second half of the year should outperform first half of the year. So I see them getting to 500, 450, 500 anyway. So that would put you around 900. And I'm flexible. I don't need the numbers to be precise. And then there's a detail that I don't know if you picked this up in, I think it was the Q1 call, where Drew Baglino, for those who don't know, I'm like a monster. Like, I'm a fan of Elon Musk, right? But I actually like looking at people in Elon's orbit. So I'm a huge fan of Gwynne Shotwell at SpaceX. I love Franz von Holzhausen, even though I can't pronounce his name half the time. I actually got to meet Franz and Drew Baglino at Plaid Day.
I heard about that.
Actually, that was
Yeah.
absolutely awesome. Just
Lucky.
amazing. I'm so excited. I'm tingling. And I think Drew is like the nerds. Franz is this charismatic figure who's up on the stage with a sledgehammer, and Drew and Karpathy and Zach are kind of like the nerds in the room. And I'm a nerd. I see myself as a nerd, so I love those guys. And
the nerds are taking over, Warren.
Nerds are winning.
Yeah.
So Drew Baglino in the Q1 call, there was a question. I actually had asked this question on say.com and I got pushed down. So my question didn't get asked, but I think it was Pierre Ferragu asked this question about supplier batteries. And Drew said that they expect to more than double cells from suppliers in 2022 versus 2021. So if you think, on top of getting more than double the batteries from suppliers in 2022 versus 2021, they're going to be producing their own batteries.
Definitely.
So I look at 900,000, let's say in 2021, whether it's 920 or 880 or whatever. I look at that 900,000 in 2021 and I double it because we're doubling the number of supplier cells and we're adding Tesla cells. We're more than doubling supplier cells. And I end up more than doubling it. And I get to 2 million vehicles in 2022 and maybe more than that. I don't know what your total is for 2022.
Well, I anticipated your question and looked it up. I have 1,635,810 in 2022.
Okay, so you heard my explanation for how I get to 2 million vehicles. And by the way, 2023, I get to 5 million. And that's more flying by the seat of my pants. I think, so your curve this curve here has sort of a straight slope.
Your curve is way over mine. Yeah, in 2023,
but just
I have 2,426,000.
I just mean the slope that you have from 2021 to 2023 is close to a straight line. And Elon likes to talk about exponentials and the curve. To me, the curve is going to bend up. It's eventually going to bend back. But to me, the curve bends upward. So I'm just sort of curious, how do you get to, let's say, 1.6 million vehicles? You've heard how I get to 2 million vehicles in 2022. And that's a high level. Well, if you're going to more than double supplier cells and you're going to add Tesla produced cells, you can shift some of the cells into Tesla Energy, but that's still going to increase your revenue significantly. So how do you get to your numbers for 2022 differently than how I got to the numbers?
By taking the approach at the opposite end of the spectrum from yours. So if you hit the stop sharing button, I'll hit the start sharing button and take people behind the curtain for a peek at the spreadsheet live and in person. So most of the tweets in that 69 tweet thread, let me go to the top of the page here. Can you see my screen?
Yes, I can see it. I assume others can see it. I can't see what now that we're screen sharing, I can't see what others see, but I can't see the chat anymore, but I think we're doing well.
Okay. So welcome to my spreadsheet. This is my Tesla earnings projection model. I update this frequently, all the time. I'm in here updating it every week. As news happens, before I forget, I'll bring it in here, update it. When Tesla changes prices, I update those. When any kind of news happens that would change how profitable Tesla is going to be in the future, I go ahead and come in here and update the old model. So you said your approach was really high level. Hey, let's just say we're making about 1 million this year. We're going to double our purchases of cells, so we'll make twice as many vehicles next year, right?
Yes.
Well, that would be one explanation. Another would be that the Tesla Energy division of the company is going to ramp up and use some of those cells. In China, a lot of the LFP cells are being made by LG and CATL.
CATL makes the LFP.
All right. And well, Tesla will buy all the cells they can get from everybody who will make them, right?
Yes.
As long as they're compatible.
Let me just say to the audience, I can't see the chat while we're doing the screen share, but I'm checking my YouTube comments. So if there's any problems, make a comment on YouTube and I'll see it there. Or DM me on Twitter if you have my DM.
All right.
YouTube comments better though.
So I took the most detailed approach I could think of to come up with the answer to the question, how many deliveries are there going to be? I think in order to answer that question well, you need to know for every site.
Just so you know, you sat back and your mic is getting a little quieter.
Oh, sorry. For every site, for every model, you need to know a few things. What is the weekly maximum production capacity? And by that, I mean, what was the design intent of the line that was built for that vehicle at that site? If you could, in theory, run the thing all 13 weeks, or if you could run it 7 days a week at maximum capacity, all the shifts that you would intend to run on it, then during this quarter, in how many of those weeks were we producing vehicles? Sometimes there's a shutdown at a factory. You need to factor that into your forecast, right? Then how good do we think the production efficiency is on that vehicle at that site in that quarter? So with those, you can get to vehicles produced. It's the product of those three variables. If you know what the capacity is, how many weeks they were running, and what the production efficiency percentage is, that'll give you the vehicles that they should produce. Well, actually, all of these 2018 through 2021 Q1, these are all actuals. They really happened, right? And I have to make assumptions about what the beginning inventory, ending inventory were, but you want to understand those, and the information is provided for the S and X combined and for the 3 and Y combined in the production and deliveries report. We're going to get that in just a couple of weeks here for Q2. And they also provide the delivery subject to lease accounting that'll become important later. So this is what you do. So for Q2, Model S, they didn't produce any in Q1 because the lines were torn up to make Plaid Model S. And so no production, and they sold the 1,000 Model S's that they had on hand and the 1,030 Model X's that they had on hand, right? So you can find this number in the most recent production and deliveries report. There were 2,030 Model S and X vehicles sold, right? So how do we think that'll change next quarter? Well, I think we'll have 4 weeks of production at like a 35% production efficiency to produce 1,400 vehicles. You're not going to be able to deliver all 1,400. There will be some that are still on the lots at Tesla service centers waiting for owners to come pick them up and buy them. So that might get us 1,200 Model S deliveries. Maybe there's some Model X's out there still to be delivered, right? Probably not very many in Q2, but then it'll ramp up after that, right? So you just do this process for every one of the vehicles. I don't know if you want me to walk through.
Well, let me challenge you on Model S there up at the top.
Okay.
So now we live in a world. By the way, I've learned that Tesla employees do not like the term Elon time. So
I heard you mention that. Yeah.
if you're having a conversation with a Tesla employee, I would suggest don't use that phrase. I don't know if the SpaceX employees mind it as much, but the Tesla employees do not seem to like that term. So I would avoid using that term. But I look at your number here, and you've got 1,000 Model S's and 1,000 Model X's a week. And I think Elon said at some point that he expected that would be 50,000 of each a year.
It would be if you could run the lines all day and night, all year. Yeah.
And I think that Elon said that he expected production capacity for S and X to be higher. If I remember correctly, he thought they were going to get to potentially 2,500 a week.
Well, you gave me the perfect segue into that by saying employees at Tesla don't like to hear Elon time. When we hear Elon time, it's funny and it's a joke. And when they hear Elon time, it's a demand for them to get back to work and produce things that no one else on Earth ever produces in about half the time they think it'll take them to do. So, Elon challenges people by giving them aggressive deadlines, and it works. It's an effective strategy. It's a good strategy. People are more motivated when they're able to achieve success in the near term towards a long-term vision, and when they buy into that vision and believe in it. And Elon is a very effective leader of people. He assembles a team that is really effective at delivering on aggressive timelines.
So I hear that, but at the same time, my impression of how Model S and Model X are being made is they've made things simpler. There's fewer parts, there's fewer processes. So they should be able to produce a higher production capacity because they've made it a simpler vehicle to make. They've made it a lower cost vehicle to make. And you've got the 1,000 production capacity from Q1 2018 straight through Q3 2023. It's as if the production capacity never increases. And that's for a bull, that seems a little pessimistic.
So remember what I said earlier about picking the midpoint of a likely range of outcomes. We've heard Elon give lots of guesses as to future delivery numbers or the times when a release would be delivered, right? Everybody remembers the 2020 Roadster. That's what the new Roadster was called before 2020. So it's dessert. Eventually, it will be time to have dessert. It's not time to have dessert yet. There's more important stuff to do. And I hope that Tesla will beat the numbers that I have here. But for anybody who thinks that my numbers are super aggressive and wildly optimistic, you've offered an alternative viewpoint.
Okay, so to me, Model S and Model X are actually pretty unimportant for the future of Tesla because they're fairly low volume vehicles. Roadster is a fairly they're important for sort of the halo effect of having the crazy vehicle.
This is my favorite chart for illustrating what you're talking about. Yeah. The red is Model S, the blue is Model X.
Yeah, and the bread and butter is 3 and Y, and really going forward, it's probably going to be Y more than even 3. Until we get to 2023 and there might be a new vehicle on the horizon. So, and yes. Cybertruck, of course, is coming as well, we think.
For sure. Yeah, they're definitely working on getting a Cybertruck built in Texas.
Yeah. So you're clearly showing growth in Model Y. I think you said a lot of that when we talked earlier. I think you said a lot of that is Shanghai.
For sure. Yeah. Yeah, Fremont's making a lot of Model Ys already, which is what you see here. Shanghai just started making them more recently, and they're the one that has a lot more room to ramp. So yeah, and they'll continue to ramp through this year into next.
So the driver for Q4's big numbers, the vehicle delivery driver for the big numbers, is really primarily growth in Model Y. I mean, there's some growth in X, there's some growth in S, from Q1 and Q2 where they're basically zero. But you can see comparing Q1 to Q4, Model Y jumps a lot. And Model 3 is pretty stable.
Growing. Yeah, so it looks like it's growing because the Model S underneath it is growing on this stacked bar chart. But I don't have a lot of Model 3 in my growth in my forecast for this year for the delivery volume. It's mostly Model Y, and that's mostly coming from China. Yeah.
Right. So if we can go back to that other sheet we were looking at, and I wanted to ask you about in 2023, what I can see your projection for Fremont Model 3 isn't growing much in terms of capacity. What do you see? And it's like I'm looking at, say, Q1 2020, you have 70% production efficiency. Q3 2023, you only have 61% production efficiency. What is keeping production efficiency down for Fremont Model 3 going out to 2023?
Well, or
am I reading that wrong?
So this is the production efficiency line for the Fremont Model 3 here. So I do have it getting more efficient over time, building over time. So this Model X is just temporarily interrupted right now while the Plaid Model X is getting the finishing touches put on the line at Fremont. But I think in Q3 we'll see more production for it.
But it's really striking that Fremont is producing fewer Model 3s in Q3 2023 than it produced in Q3 2019. 4 years later, you would think the factory would be producing more Model 3s than it did in 2019. What?
Well, it's not all it's not all sunshine and roses when you build factories in foreign countries. So back in 2019, these Model 3s were being shipped internationally, right? So 2019 was the Q1 was the first quarter that Model 3s were shipped to Europe. That was the whole question about homologation and whether Europe would accept the Model 3 at all with the touchscreen. The short seller community on Twitter thought that it would never happen, and then it did. One of many times their crackpot theories did not work out. So these include shipments to other continents that involve paying people to load them onto roll-on, roll-off ships and send them through the Panama Canal to the finishing factory in Belgium, right? To get them out to European buyers. When you have a gigafactory in Grünheide, you don't have to worry about that anymore.
Giga Berlin is going to make that unnecessary.
Yeah, so they've already gotten help in 2020 and 2021 from the Model 3 production from Giga Shanghai, and that's going to continue into the ramp in Berlin, you know.
Yeah.
The Model Y does take some business from Model 3. So if I show you this line, you'll feel a lot better about the Fremont Model Y production. And then if I take you further down the page, you'll feel pretty good about the Shanghai Model Y production ramping over time. And then, oh yeah, after Berlin, there's Texas, and Texas will also be producing Model Y soon. The end of this year, I have them starting, and they're going to ramp.
Well, let's talk about something that the audience will probably be excited about. You have Cybertruck.
Yeah.
So tell us what you see happening for Cybertruck in 2021, 2022, and 2023.
Yeah, Elon keeps saying we'll be lucky to get any Cybertrucks delivered at the end of this year. So I have taken him to heart and only forecast the 250 Cybertruck delivery number for Q4 2021. If that number turns out to be 0, I won't have missed by very much.
Right. I think it's going to be 0. I want it to be. I'm order number 29,000 something. So I want it to be sooner, but by your numbers, I guess I'm waiting to Q2.
So I try to be conservative with the ramp here, but it's just so hard to get the timing exactly right when I don't have internal information. Tesla doesn't provide a lot of detail to us on guessing when when the ramp will start and how fast it will grow. So you want to make a forecast, you have to make some assumptions. If you want to make an omelet, you got to break some eggs.
Yeah.
So this is the way that I'm modeling it. Others will have different assumptions and come to different conclusions.
Yeah, I like your Q3 number for Cybertruck producing, because my impression was their target was maybe 250 or 300,000 Cybertrucks a year. You actually have production reaching 80,000 in the third quarter, which would be 320,000 a year potentially, and going up even beyond that.
The pickup market in the US is huge. Ford alone sells about 1 million, almost 1 million Ford F-150s per year. The Cybertruck is a better vehicle than the Ford F-150 in every way, and it's not close. Now, most of the people who buy Ford F-150s do not know that. So it may take a while before people figure it out. But in the end, the best product wins. And Tesla makes the best product. Tesla makes the safest vehicles. They're the most fun. They're the fastest. They have the best technology in them. They have the best resale values. it's hard to make the case for buying something that isn't a Tesla in 2021. I do not understand the people who will go out and blow 100 grand on some BMW or Mercedes that is demonstrably inferior to a Tesla in every way you can think of. But the reality of the marketplace is that there are people who do not make the choice that's in their best interest. You just
I think
have to
they're really
believe
going to.
that over the long run, more people will find out. And as the awareness builds, more people will figure out I shouldn't make a really dumb decision. I should buy the best vehicle available, which is a Tesla.
Yeah, I actually think that what's really going to hit them hard is you get 2 or 3 years out, and the resale value of internal combustion engine vehicles is really going to start to drop as
Yeah.
as the market begins to realize how much better EVs are, especially at the high end, especially for these high end vehicles.
Yeah.
Who is going to want $100,000 BMW when an $80,000 Tesla is significantly better in every way?
Yeah.
I just don't get it.
So some of the people who bought these Fremont produced Model Ys in Q3 and Q4 of last year have already sold them for more than they paid.
Right.
Uh,
Right.
it's a weird thing to think about. It never applies to other vehicles. You buy a BMW and sell it 3 years later, you're lucky if you get half what you paid for it.
Yeah.
People who do the total cost of ownership calculation, including cost of fuel, which is cheaper in an EV, including maintenance, which is far cheaper in an EV,
Yeah.
will discover it's a better financial decision to buy a Tesla than almost anything else you can think of.
Okay. So in your list of vehicles, do you have the fictional 2023 Tesla vehicle that was hinted at Battery Day?
So I do not have a slot in here for the $25,000 robotaxi. People have different names for what they want to call that. Dave Lee wants to call it the Generation 4 vehicle.
Oh,
I like that a
that.
lot better than I like the Model 2.
Oh, Model 2's
2
dead.
doesn't sound right. Yeah.
Model 2's dead. I agree. I just call it the 2023 compact.
Yeah. So
I'm not sure it's going to be a compact, but I think it's going to be a compact.
when they pull the tarp off of it and show us what it is, maybe that'll be the time to add it to the forecast.
Well, you have Shanghai Compact. What is that?
Well, this one has been talked about. We haven't seen it. Okay, fair point. But for longer than there's been a robotaxi, there's been talk about a China produced or a China designed vehicle. And Berlin will also have one of those from the Berlin Design Studio. I'm calling it a compact because I can't imagine it not being a smaller vehicle than, the Model 3 and Model Y that they're already producing. Maybe I'll be wrong about that, and this will look foolish down the road. But it seems to me that the direction you would want to go to expand your total addressable market, your TAM, is to have a lower priced vehicle. And the small cars are popular in China, and Chinese consumers are smart. They do not overpay for vehicles, but they do value premium brands. So if you can hit that sweet spot and offer them an excellent value on a premium brand, you can sell a lot, and people do. And my projection is that Tesla will sell a compact vehicle, a smaller vehicle than a Model 3, designed in China, maybe as early as late next year. We'll see. I might have to push this out. Sometimes that happens. It's tough to expect Tesla to do lots of different things at the same time.
Do you think this is just going to be a hatchback based on the Model 3 platform, or you see something different? Or is it just winging it?
Well, it could be it could be a compact vehicle based on a Cybertruck platform.
Yeah.
If Tesla can sell the base Cybertruck for 39, why would they not be able to sell something with a similar design aesthetic and exoskeleton construction to save on production cost for a $25,000 price point?
I'll just tell you, I had a couple of really important conversations that were very material to me, and I don't think I mentioned this in any of my other I took notes, but this conversation reminded me of this part of the conversation with some key people at Tesla. My impression is that there are no immediate plans to make a Cybertruck-based vehicle other than Cybertruck.
All right.
That the pitch was, I specifically asked about whether there would be future Cybertruck type vehicles with folded steel exoskeletons, and wouldn't that be less expensive manufacturing? And I'm not sure that the person I asked this question to was the right person to ask, but very instrumental in Cybertruck. Basically, that person felt that Cybertruck is a particularly good design for a pickup truck, and not necessarily that it's a different type of manufacturing, but not necessarily lower cost manufacturing, which surprised me. And that it's particularly useful for a pickup truck because it has to be tough, and that stainless steel construction makes it tough.
Sure. Yeah. So this can be a car. That's fine. It doesn't need to be a Cybertruck.
And you have something similar for Berlin, a Berlin compact, Berlin
Yeah,
European model?
I'm just calling it a European model.
Yeah.
Because I don't know what that design studio will come up with. So I'm keeping that one as generic as possible.
And do you model Powerwall and Megapack in your sheets?
Yeah.
So can we go to that?
Sure. So I don't model them out the same way I do vehicle production, because that would be a little bit of overkill. So the top section is just to arrive at what do I think the production and deliveries are going to be. The next section, and my thread walks through all of these. So if you're worried that I'm flying past them too quickly for you, don't worry. They're all in that thread on Twitter. You can go find. So the second section is building up to the average sale price for every vehicle. So if I get past the subtotals here, I'll get to the ASP by site, model, and revenue type. So
I just got to ask you to get closer to your mic again. I'm sorry.
Okay, so I'll show you the Fremont Model Y as my example here. You can see that in Q1, the entry price for Model Y was $41,990 because the standard range was still available. The long range starts at $48,990, and they've raised that price since. So they keep bumping it up another $500. So they'll honor the older reserved prices, but going forward, it's going to be higher prices. And then I think they're going to bring the SR back again. So that's what I'm forecasting for early 2022. So the way that I built up to the total ASP is to just look at every option and assume a price and a take rate and multiply one by the other. So for paint, how many options are there? There's this many options. What do I think the distribution is on those options? Who's taking the free option? Who's taking the $1,000 paint? Who's taking the $2,000 paint? And that's how you get to an average revenue per Fremont Model Y of $750 associated with paint, if that makes sense. And then you just do the same thing for each of the options, right? You can pay more to get wheels. I'm assuming 70% of people do not pay more to get those wheels, right? Et cetera, all the way down. Okay, so once you've got a total cash buyer ASP, there's a few more adjustments you need to make. One of those is for leased vehicles. Those buyers are not paying you $58,790 for their Model Y. They're paying you less than that. And then they're giving the vehicle back to Tesla at the end of their lease. So you have to make that adjustment. Destination and delivery fee, regulatory credit. I'm not calling this part of the revenue of the car, right? It's just the destination delivery fee. Regulatory credits are an adjustment you have to make to get to the total revenue per delivery. And then I'm throwing everything else into other. So FSD deferral, over-the-air updates, data packages, monthly data, et cetera.
Okay. And just to address the Tesla Q complaint, from what I see, you've got regulatory credits heading towards zero by 2023.
I do, yeah. Where's my chart on regulatory credits? It's always easier to show people a chart than it is to make them absorb the numbers that appear in a table. So I like to do graphic illustrations like this one. So back here in 2018, Gordon Johnson was on television saying regulatory credits are going away. It's a one-time item, he said when he went on TV. It's a one-time item and it's going away.
Gordon.
And then record high, record high, record high, record high since then, right? Yes. So the gray here are actuals and the red here are my forecasts.
Well, it's
And
entirely
assuming-
possible, right, that it could keep going up.
There's nothing in the world to stop it from continuing to go up.
It seems
I'm
like
not
when Tesla,
forecasting that.
it seems like when Tesla sells more cars, they get more regulatory credits.
It kind of seems that way. There's a correlation, a strong correlation between deliveries and regulatory credit revenue. And I'm forecasting that it's going to reverse itself, but maybe Tesla will beat this forecast over the rest of this year, and we'll have favorability versus my model.
Yeah.
I am not opposed to them beating my forecast.
I think Zach Kirkhorn actually said at one point that they're not counting on regulatory credit revenue, but he was projecting that it would continue to rise for a while.
Yeah, they're not relying on the regulatory credit revenue being there, and they're not pricing their vehicles assuming that the subsidy of regulatory credits will make them whole, right? Okay, so you do that for every model at every site, and that gets you your build up to what the total ASPs are on average. You can see what it is by site for Fremont, for Shanghai, for Berlin, for Texas. And then at the bottom, you know how much revenue you expect there to be, right? Okay, so down here, we get to the Tesla energy section, which is right here. This is a little bit more high level because I just don't have a lot of information available to forecast this. So I'm taking maybe a similar approach to the one that you're taking, Warren, of looking at what the actuals have been and trying to play forward, okay, what do I think that revenue is going to do next? Which of these products is in the decline? Which of these products is going to grow? How much is it going to grow? Is there seasonality associated with it? In the case of solar panels, there definitely is.
Well, it seems like just above what you were doing, you have solar deployed, storage deployed, solar revenue per watt, and storage revenue per watt hour. And it seems like your storage deployed number goes up dramatically from, let's say, the 1584 in Q4 to like 4X's by Q4 2023. So you're seeing significant growth in storage, if I'm reading that right.
Yeah, there should be a lot more as the cell constraint eases. So over all this time period, what did we hear earnings call after earnings call? Cell constraint. We would love to accelerate Tesla Energy more as a division than we have so far, but we can't get enough cells to meet the orders we have for electric vehicles, which have to be our priority. Because of the structure of our cost base, we've got these big factories that employ lots of people. We need to keep them busy producing vehicles and collecting a better gross margin selling those vehicles than we make in Tesla Energy. So energy gets the scraps. If there's a shortage on cells, Tesla Energy pays for that shortage. But if Tesla is able to solve their cell constraint issue, then storage deployed goes up.
Yeah, and I would just say in my own modeling, what I see is revenue per kilowatt hour is higher for vehicles than it is for storage. Now, there's a little bit of a twist there. If every solar panel installation has 2 or 3 power walls, or every solar roof installation has 2 or 3 power walls, then you really have to add the revenue from the panels or the roof to the power wall revenue, and you might end up getting a higher revenue per kilowatt hour if you're doing. And I think they did require now that if you're getting solar, you have to get Powerwall included, because
Yes.
I think they're making a lot of money on Powerwall. I think Powerwall is high margin. So when you have this number of storage deployed in, let's say, Q4, what share of that 6.6 gigawatt hours of batteries are of storage is coming from Powerwall versus PowerPack versus Megapack? Is that something you can see in your chart?
Yeah, they're down here. So I don't have them as the megawatts and revenue per watt hour, but I have them as the revenue dollars, which is where I need to go to make an income statement. And I don't want to flatter myself that I've been very good at forecasting Tesla energy. It hops around a lot. You can see in the actuals. Uh, this is not an extremely consistent line. The total Tesla energy revenue line,
Right.
it's evasive trying to forecast this. So I don't overcomplicate my forecast for the Tesla Energy division or for the services and other. I kind of, um, well, I do complicate it somewhat, don't I? But I take the best crack at it that I think I can.
Well, the reason as I'm looking at your numbers, because I'm picking on your 2023. I love what you're doing. So I'm critical, but I'm trying to be critical in a way that may be constructive, and hopefully it's constructive.
Yeah.
I'm hooked on this because I feel like it's my defining thing is the battery revenue model. And I
Okay.
feel like, and Elon actually mentioned it in a quarterly call.
Yeah.
He didn't say Warren's battery revenue model, but I got all these people saying, Warren, Elon used your model. I'm like, no, I'm pretty sure he's using his model, and I
You,
just guessed somewhere close to
you,
his model.
you,
And
you independently arrived at it.
he
Yeah.
probably uses more than one model, and so do I. But when I look at your numbers, if they deploy 6.6 gigawatt hours in the fourth quarter of 2023, and I guess that's a total of 11 and 6, maybe it's 20 gigawatt hours for the year. I don't think if I'm correct, and so I should say if Drew is correct, and they're going to more than double battery supply in 2022. Sorry, I really should be going back to 2022. 2022, I think you have maybe it's a little more than 10 gigawatt hours of
I got
batteries.
12. Yeah.
Yeah. So if they more than double supplier cells and they add their own batteries, and I think it's pretty clear the 4680s are going into cars, they're not going in semi, they're not going into storage.
For
I
sure. Yeah. All the 4680s are going to go into structural packs for vehicles.
Yeah, I don't think your numbers add up to enough batteries to match what Drew's, and now maybe Drew's wrong, right? But I think this is why I think you're underestimating deliveries for 2022 and 2023. And well, not why you're underestimating, why your estimates and mine differ.
Sure.
It's
Yeah. I mean, I'm old enough to remember when JB Straubel was giving forecasts for Tesla Energy, and he said it's going to be 40% growth year over year from here on out.
right.
And I modeled that into my forecast, and they missed it every single time.
Yeah.
Right. They want to grow this division, and they have a lot of difficulty coming up with enough cells to do so.
Right.
I
So
hope that gets fixed quickly, but I don't
do you have a sense
know.
of, in China, like if they do a compact, it's
Yeah,
probably going to use iron phosphate cells, right?
I would hope so. That seems the logical choice.
So the one of the things that goes along with Drew's projection is CATL has projected that they're going to radically increase production of iron phosphate cells to, I think, 1.2 terawatt hours in 2025, but it's some pretty big jumps over the next few years. I think one year might be 2023 was 230 gigawatt hours. And I believe they're building a plant next to Giga Shanghai or close to Giga Shanghai for 80 gigawatt hours.
Yeah.
So I guess one of my questions, I'm really caught up in the battery thing. So let's suppose CATL scales up their production of iron phosphate cells.
Right.
And Tesla, I think Tesla's going to literally buy everyone that CATL can make. If they get to 230 gigawatt hours, say in 2023, well, they're going into cars or they're going into Megapack. And I think that's the thing that they're always going to be cell constrained. They have 1.2 terawatt hours of batteries in 2025. They're going to be able to produce products to use them. And it's always going to be a form of a constraint, but it frees them up a lot when they produce more cells. I guess I'll ask it to you this. I'm trying to find a way of asking this question. Do you think they're not going to be able to achieve the more than double the cells and produce that? I mean, do you have a sense of how many 4680 cells they're going to produce in 2022 and 2023? Or you just
Well,
don't model it that way?
I don't model it based on, okay, what's the sourcing and procurement strategy for Tesla? Where are they going to get their cells from? I'm looking at it more from, what does Tesla have the capacity to do? What facilities does Tesla have for producing products, and how quickly are they going to be able to scale that up to meet demand?
Can we go off the share screen just so
Yeah,
I can see the chat, just to make sure we're not messing something up? Or
sure.
let me just see.
Yeah, we're at the 1 hour mark. It's
We're
a good
doing
time
good.
to stop and do a check.
Yeah. So I can see the chat, folks. So we're not really digging into the numbers right now. So I think we'll probably go back into the share screen in a minute, but I just wanted to get a sense of where we are. So I go from this high level and I start. Well, I think we all agree that Tesla is cell constrained. It's battery constrained. That's the limiting factor, in the words of my favorite channel. I don't know if you watch Jordan Giesecke's channel. I absolutely watch every video.
Yeah,
He actually just
sure.
made a video and I haven't watched it yet. And I feel like I'm getting itchy because I haven't watched Jordan's video yet.
He's the best on batteries. Yeah.
So do you think, so I'm going on this theory that they're going to produce 30 gigawatt hours of 46, I'm making up numbers right now, but let's say they're going to produce 30 gigawatt hours of 4680 cells in 2022. Where do those batteries go? They're going to produce 100 gigawatt hours of 4680s in 2023. Where do those batteries go? And this is how I approach things, right? I try to figure out, okay, how many cells do I think they're going to have and what are they going to do with them? What do you think of that approach? Do you think it makes sense? It's risky because if the number of cells is wrong, then your whole model falls apart. But I'm just curious what your take is on that approach.
Yeah, I hope that the design for the gigafactories that they're building in Texas and in Berlin is to allow them surplus capacity on batteries, so that it's not just producing enough cells to make the vehicles that factory produces. I don't know that for a fact, though. And it's tough to do things no one has ever done before. No one has ever made these cells before.
Right.
At Battery Day, Elon wasn't showing a PowerPoint of the batteries that were already at scale production. He was showing a PowerPoint of Tesla's plan for what they intend to do. It's not always a smooth road or an easy and quick one. So I've forecast something that I believe is right in the middle between a conservative and an aggressive forecast.
Yeah. I mean, I thought when they started this that the first place the 4680s were going to go was into semi. And by judging by Battery Day, the 4680s are going to go into Cybertruck and semi. And Model Y was not going to get high nickel cells. There's this distinction between the LFP cells, the nickel manganese cells, and the high nickel cells. And I don't know if you heard me talk about this part of the conversation, but I had the impression that CATL might make 4680 iron phosphate cells, and LG Chem and Panasonic might make 4680 nickel manganese cells to supplement, or maybe to be the bread and butter, and that Tesla's high nickel cells would be almost like specialty cells for critical uses where the energy density matters most, like semi and Cybertruck.
Yep.
But it seems like if they're going to be producing 4680 cells at Giga Berlin, and they're going to be producing Model Y at Giga Berlin, then Model Y is going to have the Berlin Model Y and the Texas Model Y, maybe less so the Texas Model Y, are going to be made with 4680 high nickel cells, which is not how Battery Day was presented. What do you think of that?
Yeah. Well, we don't know, and I'm okay saying that I don't know sometimes. So it sure makes the most sense that in a hauling vehicle, so a vehicle that tows or does over-the-road trucking, you need the best, highest capacity, highest performing battery you can get with the best recharge times, all the stuff we learned at Battery Day. Those are going to be a perfect fit for the Cybertruck, the Semi, the S, the X, and the Roadster, for sure. If you had more, yes, you would put them in the 3 and the Y also. I think Elon would like to have all of them running on it. But a small robotaxi, no, you would not need a high nickel content cell for that. Maybe these other vehicles that come out of the design studios in Germany and China, maybe they don't need the high nickel content performance batteries.
But, and then, sorry, I should say, so I had this conversation with Tesla insiders, and my impression is that for the next couple years, the only 4680 cells that will be produced will be high nickel cells by Tesla. And that
Sure.
the other battery makers are 2 years behind Tesla on, and this is literally the words I heard from someone I respect and trust.
Yeah.
And I guess I shouldn't say trust because I don't know the person well, and I don't, the first time I met the person, but someone I don't think would lie to me about this said that the suppliers are 2 years behind Tesla on 4680, which means if Tesla's not going to have its high nickel 4680 cells in vehicles until the end of 2021, then the suppliers aren't going to have 4680s ready for vehicles until 2023.
Right.
So, but they're going to be producing Model Ys with structural pack that's going to need 4680 cells. So Model Y from Berlin and Texas will have to use 4680 high nickel cells for the first couple of years. Does it make sense, or am I getting something wrong?
Well, I think you can produce, 4680 is just a form factor, right? You can make a high iron content LFP 4680. That's a recipe you could follow.
But no, but my point was no one is making that yet. And it's not going to be ready in time. We were expecting Tesla to produce Model Ys out of Berlin and Texas Q4 this year.
So you don't get a structural pack into a China-built Model 3 or Model Y.
No,
You
I'm
keep
talking
making
about
the packs we make today.
I'm talking about Berlin and Texas. That they're going to have to use the high nickel cells in Model Y coming out of Berlin and Texas.
They wouldn't have to. They can continue to buy cells from Panasonic.
No, but if it's going to have a structural pack, and the structural pack, you would have to do a structural pack with 2170 cells.
If you don't have the cells, you can't do the structural pack. You gotta do them the same way we do them today. So you just stay on that until you've got enough cells to convert.
Yeah,
Anyway, you buy as many batteries as you can from third parties.
No, I get that they're going to buy the batteries, and the batteries are going to go in vehicles. I just think that my theory is that the Texas and Berlin Model Ys will actually use high nickel cells for the first couple of years. And that's why they're going to be high-end vehicles, because they're going to have higher energy density. They're going to be Jordan and I talked about this, and I think Jordan may have covered this in a video. We think that the Texas and Berlin Model Y will be about 500 pounds or 200 kilograms lighter than the Fremont Model Y and the Shanghai Model Y because of the structural pack and the front and rear castings, the structural pack in particular. And, it still works if you use high nickel cells, but if those cells don't exist, so.
Then you use whatever you have.
No, but they are.
People are driving around in Model Ys today that don't have a structural pack or a 4680 cell in them, and you can just keep making them.
Yeah. Okay. So, all right, let's move on. So
I don't see what stops you from continuing to make the vehicles they're making today.
No, but they're designing Berlin and Texas to make them with structural pack as inherent in the vehicle. So it would have to be that they would use batteries that work in structure. Now, one of my theories is that they will find a way to use 2170 cells in structural pack, right? That's certainly a viable possibility.
All right.
But I think for LFP cells, I don't think CATL supplies them in cylindrical format. And I don't think the prismatic form, the box form would work for structural pack. It has to be cylindrical cells. So yeah, I'm getting some chat comments that maybe your insiders are feeding you disinformation, or they're trying to feed information to Tesla influencers as a way of sandbagging. Yeah, I agree with that, but it's very clear that they're building that Giga Texas and Giga Berlin are designed for structural pack on Model Y. So either they're going to use the high nickel cells produced, and it's just, that's the other thing. You wouldn't make high nickel cells in Berlin and then ship them back to the US for Semi and Cybertruck. You would use them in Europe. That's the whole ethos, the whole principle that they have.
It's
So
definitely plan A for sure.
and then the same thing if you're producing high nickel 4680 cells in Texas, you're probably not going to send them to Shanghai or to Nevada. You're probably going to use them in Austin, especially when you already have cells being, I mean, you're going to send some of them. My theory is the Cato Road 4680s go to Semi and the Texas 4680 high nickel cells go to Model Y. And here's the theory. The theory is that they can't tell us that Model Y from Berlin and Texas is going to have 4680 high nickel cells, because that would Osborne the current Model Y. If more people realized how amazing because Jordan and I both believe this, the Model Ys coming out of Berlin and Texas are going to be like way better. And they'll probably shift over production of Fremont and Shanghai eventually to this approach, but they're going to be so much better that, does it Osborne the current Model Y?
Yeah, I don't know how they're doing on yield on the 4680s with high nickel content. I don't know how they're doing on volume. So we hope that everything goes smoothly and that they will be able to produce at scale very quickly.
Yeah.
But if history is a guide, things do not always go as planned, and sometimes you have to buy all the USB cables in the Bay Area.
Okay, so did you want to go back into your spreadsheet and show people something that we haven't covered that you think is important?
Well, I never even answered. I did. I did answer your question about Tesla Energy and how I'm forecasting that. So, that's about halfway down the page for my detailed model is the total revenue. So, this is what I'm forecasting out. You don't see 2022 or 2023 in the tweet.
Okay, so just to be clear, 2021, Tesla's total revenue was, 2020 total revenue is about 31 billion.
31.5 billion. Yeah, I've got a chart here for revenue, don't I? Should. Well, maybe I don't.
I don't remember seeing it. I don't remember seeing that in your tweets.
Well, the second tweet in the thread, let me bring that up, was a Flourish chart that I made. So there's a website called Flourish where you can build really pretty charts. And I can go to my bookmarks and find it really fast and bring it up. This one.
Right.
So here's the 31.5 billion that you were just talking about. That's how much revenue Tesla made in 2020. You can see what the quarters were doing. What I always find myself doing on this chart is comparing these Q1s as we go backwards in time.
Yeah.
And just seeing what the trend is here, right? This 73 is $73 million. That's 10 times more money than Mark B. Spiegel has ever managed. That's a large amount of money, right? 73 million is no joke. That's serious cash. You can retire and live extravagantly on $73 million, and it doesn't even show up at all on this chart. Yeah. It's not even a thing. So you can see the annual revenues growing, and look at how the Q1s are getting bigger. $10.4 billion. This is an actual. This was reported in the most recent 10Q filing from Tesla, 10.389 billion.
So the revenue for the first quarter of 2021 was more than the revenue for the whole year 2016, and not far off the whole year 2017.
Yes. So only 4 years ago, it took Tesla the whole year to make $11.7 billion. And they're going to make more than that much money this quarter.
Right. So going back to the sheet, it seems like, I have ballparked Tesla's revenue for 2022 at about 60 billion. And then 2023, I've got them at potentially 120 billion or more. What do you see for annual revenue for 2022 first and then 2023?
So for 2022, this is 103 billion.
Okay.
For 20, that was 2022.
Wow.
2023, I have 151 in
Okay, so
revenue.
your numbers are not, you're actually going higher than me for 2022. And then I have theories of getting the revenue to 150 billion in 2023. 120 billion is my low end for 2023. This is one of those things that I feel like invest people who talk about Tesla don't get is if Tesla goes from 31 billion in revenue in 2021 to even 60 billion in revenue in 2022 and then 120 billion or more in 20, that's some really fast growth.
Yeah, well, but Tesla's been doing it for so long, right? It's not new. This kind of revenue growth has been happening the whole time. It's not new. It's not a secret, and it's going to continue because
Well,
what's better than one factory that makes 500,000 vehicles? Four factories that
so
each
sorry,
make 500,000 vehicles.
what maybe I got that wrong. I think 2021 my number was 60 billion. What's your
Oh,
total for 2021?
21, 55.8
Okay, so
billion.
we're close because I'm at
Yeah,
60.
you're at
And then
60.
2022 you're at what?
103.
Okay, and I'm at 120 for 2022.
Oh,
And then 2023 I get even crazier. So
okay.
I am a little more optimistic to you than you on the revenue line. You're more optimistic than me on the profit line. And I
I
think
don't,
I'm swinging around to your profit story.
okay. Yeah, well, it's going to surprise a lot of people when the profits come out if I got it right, and maybe I didn't. But uh, it really helps a lot when you're growing Model Y by leaps and bounds. And in China, you make really good money selling those. People are paying up for that vehicle. And you discontinue in the North American market, or you discontinue from any place that Fremont is providing the standard range, you're going to make a lot more money because the variable cost of making long range isn't that much more. It's the additional pack
Now,
cost, right?
my impression is that in Shanghai and in China, Tesla sells a standard range.
Okay.
Am I correct?
Well, let me go back up and I'll just check my ASPs up here. So here's my Shanghai. These are good starting prices up here. So the exchange rate is a little jagged from the renminbi to the US dollar. But here's what I've got for Shanghai Model Y. These
So they're
are,
actually selling for a fairly high price starting out.
yeah. So the Model 3, they've cut the price down a lot from when it started, but they're still early in the ramp for the Model Y. And people are still buying highly configured vehicles. So there must not be a standard range if these are the prices.
And it's I know they're doing LFP and Model 3. Are they doing LFP and Model Y or they haven't started that yet, as far as you know?
It's, I would assume it's the same. Yeah, it's got to be the same for the 3 and the Y, would be my assumption, but maybe somebody will correct me on that.
Okay.
Yeah. So after we do the revenues, we do the cost of sales. So it's important when you make an income statement to understand what the cost of sales is going to be. Every time we sell one of these vehicles, what are the related costs that go with that? And this is a misunderstood expense category. When Tesla was growing Model 3 quite a lot a few years ago, the research and development costs weren't going up, the SG&A costs weren't going up, and the short sellers would point to that and say, see, it's fraud. There's no way they could be selling twice as many vehicles this year as last year and have those expenses stay the same. Well, they missed it. Those expenses that are related to selling more vehicles are recorded as cost of sales. Every expense at a factory that produces vehicles goes as cost of sales. The labor that produces it, all the parts that you have to buy to make cars, the land, the rent, the electricity, every utility bill, the salaried people who work at that factory, all of those costs get recorded on an income statement as cost of sales. That was the expense that was going up, but they weren't seeing it because the gross margin was going up along with it. As you sell more vehicles, you make more economies of scale. The cost per vehicle drops the more you sell. It's a virtuous cycle. The faster you can spin that flywheel, the more profitable you are. So yeah, these are the costs that I'm forecasting for each of the options, for each of the vehicles at each of the sites to build up to the total cost of sales dollars on the income statement. And I look at them as dollars, and then I also look at them, here's the totals. I also look at them as percents. So what do we think the cost of sales percent is? So here's a good example of, you do something like this high level, you would never dream that Model S had a 93% cost of sales in Q1 and a 79.5% cost of sales in Q2. It seems like too big of a move, but if you were at really low volume and you were getting saddled with the retooling costs of tearing up that line and building a new one, you're going to depreciate that capital over the life of the asset. So every time you buy a robot to work on a line, you assign it a useful life and spread the purchase cost of that capital asset over its useful life so that there's some of the expense of buying that capital asset in all of the quarters that it will benefit over time.
Let me just ask you, when I see
Yeah.
93.2% total cost of sales per delivery, does that translate to a 6.8% gross margin on those vehicles?
Yeah, which
Okay.
is way less than it was historically, right? You look
Right.
back at previous quarters, and this was a 24% gross margin vehicle at a 76% cost of
But going
sales.
forward, it drops,
Yeah,
and that means the
so
gross margin goes up.
this is what you were looking for earlier. Hey, Tesla has done a total redesign on the Plaid Model S and the X. You know what helps this out a lot is that we're charging a lot more. I say we because I own
Yeah.
Tesla along with Elon Musk and several other people.
Yes, you and me.
Yeah,
We're both owners. Yeah.
it's my company, and Elon also owns some shares. And yeah, we decided that it would be a good idea to have Model S and Model X redesigned with the ability to make the product so much better that it commands a much higher price point. The higher the revenue goes, the lower the cost of sales percentage will go, and that accounts for most of this change, right?
Yeah.
So these are the cost of sales percentages. You can see I'm modeling them to improve over time with volume and with improvements in
Your
sourcing
Fremont
of
Model Y
equipment.
margins are insanely high.
Yeah. Structural, well, the front and rear castings on Model Y are pretty great. The price point is pretty great. You can see when I expect the standard range to come back in Q1 of 2022, I expect the cost of sales to get worse by about 10 points by allowing people to buy a much cheaper Model Y that still costs about as much to make, right? So those sorts of assumptions are working all the way through the model. And ultimately, the point is to get to the income statement, which is down here. So what's an income statement? An income statement is a way of figuring out how profitable your company is. So the format is always the same. At the top of an income statement, you say, how are we getting money from people? And the answer is we're giving them products and they're giving us money. So that's the revenue section. What are the different kinds of revenue that we're making? We're making two different kinds of automotive revenue. We make the kind when people pay cash to buy a vehicle from us, and we make the kind that comes to us over time as we lease vehicles to people and they make lease payments. Then you've got the energy division here, and then everything else gets thrown into services and other. This is supercharger revenue. It's all the service centers and the repair revenue, things like that. Gets you to total revenue. And we were just talking about this when we were looking at this chart. So here's that $10,389,000,000 worth of total revenue. And I've got it growing over time according to what's happening above, right? All of these are only repeating numbers that have already appeared above until we get down to the gross margin line. So yeah, the gross margin was pretty good in Q1 at 21.3, but I have it getting a lot better. 26.8 is a huge jump. I took a hard look at it. That's better than Tesla has reported in a long time. Maybe many years ago, there was a better, no, 22.3, 23.5 seem to be the two highest. So I've got it going higher and staying there. It's just the product of what's assumed above, right? I don't
Yeah.
think I would have guessed that the gross margin percentage would get 5 points better if somebody had asked me to come up with it off the top of my head. But if
And it
you
heads up to
believe all the assumptions above, then you believe that's the right answer.
and it heads up to 30% in Q4 2023 as well.
Yeah.
Yeah.
Yep. And part of that comes from introducing vehicles at extremely high price points like Roadster and Semi.
And just really quick for people who aren't as familiar with these numbers, gross margin basically relates to profitability. Like,
yeah,
whatever your revenue is, the higher your gross margin is, the more profit you're making on each unit of sales.
Yeah. So here's the way of thinking about that. You've got a couple of charts in the tweet thread. These are both in there. One for where does Tesla get its revenue from? It's almost all coming from the automotive segment. And then you've got this regulatory credits. Look how small they look in most quarters. These are record high regulatory credit numbers here. It's just a nickel on every dollar that Tesla's making, right? And I'm forecasting it to decline over time. Then, yeah, leasing is part of it. Energy and services another. Looks like it's not growing, but in fact, it's growing only as fast as automotive will grow, right? So as time goes by, I'm forcing the distribution on this to be 100% on every row.
Right.
So the services another isn't growing on the chart, but they are growing in terms of dollars.
Because the big number is growing, and that's a percentage of the big number.
It's a percentage of the big number. Yeah, it's taking each of these and dividing them by the total revenue. And then taking the rest of these dollars and also dividing them by that same revenue. And your profits at the bottom are what's left over if you don't spend all the revenue that you made, then you have profit.
And this is, EBITDA is not on this chart?
It is a little further down.
Okay.
So I've got non-GAAP earnings down here, and I've got a reconciliation to
Okay, there we go.
adjusted EBITDA non-GAAP down here.
Okay,
Yep.
so before we go a little deeper into this, I'm sorry, this is a little bit of a tangent, or it's a lot of a tangent, but talk about services for a second. Tesla has 25,000 superchargers around the world, and they're growing fast. I think they're going to have 50,000 at some point, 60,000. At some point, they may get to 100,000 superchargers. It's a little bit like owning 100,000 gas pumps. And that's a good business. Owning gas pumps is a pretty good business. It's not the same as owning a gas pump, because in a gas pump, you fill up somebody's tank for $50 in 5 minutes. If you're charging somebody's car, you're getting $25 in 30 minutes. But I think a lot of gas stations actually make their money on the convenience store next to the station more than they make the money on the gas. And we know that Tesla started talking about putting like some kind of diner up at a supercharger station. Do you think there's potential for significant significant revenue from superchargers and associated services that go along with them? Or is that just sort of like dressing on top of the cake, that it's what do you got, frosting on the cake, that's really not going to add up to that much to be bothering to model it?
It is more the second one for me. Yeah, I think it would be fun for Elon to pay off the promise. The idea that he had a few years ago for kind of a fun drive-in sock hop 50s something or other at a supercharger. in California, I would steer away from any really labor intensive amenities for superchargers unless they're at locations where the market would ensure success. So if you've got really high traffic locations, I know California has some in the LA to San Francisco corridor where probably, yes, that would be an okay idea to do. You're never going to make a lot of money that
Well,
way.
part of
You
the
could
problem is
lose some.
a lot of the superchargers are on someone else's land. So,
Yeah.
for example, near me, there's a plaza called Delray Marketplace, and there's a bunch of chargers. I don't know if they're supercharged. I don't know if they're V3 or V2, whatever. There's a bunch of chargers there, and Tesla can't build a diner or a convenience store attached to its superchargers there. But if Tesla decided, we're going to start either buying or leasing our own property, long-term leases on their own property, and we're going to build supercharger stations with a convenience store built in, and a convenience store is not a lot of labor,
It's not a
right?
lot of labor. It is inventory hassle to manage. It is logistics hassle to
Yeah.
manage. It's not a tremendously high margin business to be in. I would view it as more trouble than it's worth to try to manage when there's so much else that Tesla
Do you,
needs to accomplish. The,
do you
the
think
plate
they
is
could
full.
do you think they could get someone like, let's say, I don't know if you're familiar with the chain Wawa,
Yeah.
maybe the chain Wawa, they could kind of work out deals with gas stations that are already making money on this to say, hey, if you put our superchargers in, you got to pay us. Right now, maybe they're paying the Wawa to let them put superchargers in. But at some point, if they can make the case, hey, we're generating revenue for you, how
That's
about you?
it's a mutually beneficial symbiotic relationship when you have a Tesla supercharger at a Wawa station. I've seen a few of those here in Florida. I know there's a lot of Wawas up north here in the US as well. But that would be my recommendation for Tesla is partner with people who already have those issues tackled and put superchargers in good locations within easy walking distance of places that Tesla owners will enjoy visiting.
Right.
Uh,
It's
that
actually the supercharger makes the experience of owning a Tesla better, and that's a lot of more important than making revenue off the superchargers.
Yeah, and Elon's on the record as saying that superchargers will never be a profit producer, a revenue center, I think is what he said for
Yeah.
Tesla. They don't intend to gouge people on pricing for
Yeah.
electricity at superchargers ever.
I gotta ask you about that because I've seen this question before. How much revenue will they make off software in the car? People talk about there being an app store. And my impression is it's cool to have a big screen in the car. It's cool to be able to play games in the car. The vast majority of people are not going to use that feature. That my kid in the car is going to play games on their phone rather than play games on the screen. And not that there aren't exceptions, but that it's not going to, if the car is driving itself, right? You get to that point. I want to ask you about that in a minute. I almost feel like the focus on let's put an advanced gaming system in the Plaid Model S. What's I'm not going to be using that when I'm driving 0 to 60, driving, on a test track or whatever. I wonder how much people are actually going to use this feature. And
You
is
got to
that
think about your passengers too. The driver is having his fun. Why not let the passengers have their fun as well?
right? But
His or her
I
fun.
just know my own kids.
Yep.
My kids would rather be on their phone than on a big screen. And I'm sure there are some kids who are going to appreciate the big screen, but I just don't think it's that many.
Well,
So
every time you can sell somebody software, you've made money. Just
yeah,
ask Apple. They've made a lot of it selling software over the years. It's
right.
profitable to do. So
So
you
let's
don't
turn.
care about those who don't take. You care about those who take. And as long as some significant number of them do, you're going to make more money.
So let's turn to the thing that really drives Tesla up to huge numbers in the future that we're not at yet, which is when Tesla delivers FSD, if and when Tesla delivers FSD, if and when Tesla delivers robotaxis. I believe you are not modeling robotaxi revenue or profit into these sheets, right?
I don't have it in yet. It's just too hard to figure out when the start of the robotaxi service will begin and how quickly that will ramp. Um, Yeah, I think as we get direction from Tesla on when they expect that's going to start, and when we see the app, that'll be a good time to start modeling that. It's huge, huge money potential, particularly if Tesla is the first to crack that problem well. It's the future, and Tesla is definitely going to get there. Possibly the first to get there, possibly with a huge lead. Now, I know that in Chandler, Arizona, you can hail a driverless Waymo today,
Yeah.
but it will not take you to the opposite corner of Arizona because it doesn't have high resolution 3D maps of the whole state. They
It's
have
pretty
not
limited.
solved autonomy.
Right.
They have solved Chandler, Arizona.
I don't know if you saw, they just hit somebody.
Yeah, in
Waymo
San
just hit a
Francisco.
pedestrian. So,
Yeah.
well, I guess I would say this. First of all, I think it's highly unlikely anybody else solves it first, because Tesla has, I think, a better approach with their machine learning approach, and just an insanely large amount of data by comparison. I don't know if you saw, I interviewed James Dauma, and
I've seen a lot of his
with
interviews.
Dave
He's
Lee,
great.
probably. Yeah, he's great.
Yeah.
But it just, I think I understand the machine learning concept, and I understand you got to throw a lot of data at it. You got to have a lot of compute, and that's from James, and that's from listening to Karpathy a little bit as well.
Yeah.
And I haven't heard a compelling case for the self-driving success story for anybody else. It's more like, well, we've got this demonstration that we've done, but nobody's actually laid out, this is what we're doing, this is how we're doing it. But
Tesla had the winning strategy, which is let's go ahead and put the hardware in the vehicles now. And I'm talking about Q4 2016, when hardware 2 went into the Model S and Model X.
Yeah.
Every vehicle Tesla has made since is capable of being upgraded to full self-driving.
Yeah.
That's the winning formula. That's where you get the miles from. That's where you get the robo-taxis from. They're already built. They just need to get the software and awaken the army.
But I just want to push back on, there's this notion that if someone else gets there first, it's bad for Tesla. And I think there's a second reason why Tesla wins, even if they don't get there first. And it relates to the cost of vehicle production and the cost of operation per mile. So ballpark, a Waymo vehicle costs, let's say, $100,000 and lasts 100,000 miles. So that
and they've made a total of 700 of them in all these years.
No, but just let's assume that this other company comes up with, and I'll use Waymo as an example, they come up with a self-driving car that has LiDAR and it has all these other things, but ultimately that vehicle costs $100,000 to build, and it only has 100,000 mile life. I may be a little bit unfair, maybe it has a 200,000 mile life, but using 100,000 miles gets me to say the simple number that it costs $1 a mile just on depreciation of that vehicle. If you say it gets 200,000 miles, and then the other expenses of operating the vehicle over time, it's still going to be close to about $1 a mile to operate that vehicle. If you go back to 2018, there was a company called Tesloop that was operating Model S's and I think Model 3s in this triangle between San Diego, Santa Monica, and Las Vegas.
Yeah.
And they estimated their cost of operating a Model 3 at 18 cents a mile, including depreciating the vehicle. Now you go forward, and my big thing is, suppose Tesla says, we're just going to keep them and run our own robo-taxi network. So their cost of the vehicle is not the price that I pay for, it's not the $50,000 price that I pay for a Model Y. It might be the $30,000 cost for them to build it.
Well, the caution that I'll give anybody who's thinking about starting a Tesla FSD network business is to make sure that when you're doing the cost per mile calculations and you're talking about what kind of revenue per mile you're going to get, that you're talking about the revenue per mile in which there is a paying customer in the vehicle on the way to their destination. Those will not be most of the miles of that vehicle over its life, depending on where you put it. Now, if you put it in a very populated area where there's huge adoption of the app, maybe you can get more than half of your miles to be revenue producing miles. But that's the biggest flaw I've seen in the, I'll say, optimistic P&Ls for having your own Tesla FSD business.
I'm not there yet. I'm just at the competitive race between, let's say, Waymo and Tesla. Let's say they
Tesla
both.
has huge advantages.
No,
Yeah,
no, but I'm just talking about the
Yeah.
cost per mile, because the cost, whichever, if they both operate 50% occupied,
Mhm.
then they still have the same cost per mile, whether it's occupied mile or unoccupied mile. If one of them has an
Yeah.
advantage in having higher occupancy rates, that's different. But just to me, I see long range, the Waymo approach is $1 a mile cost of operating your vehicle. And the Tesla approach long range is a 10 cent a mile cost of operating your vehicle. And whatever the pricing ends up being, Tesla is, well, and I think in the short run, I think we're going to see pricing of $2 a mile, because Uber and Lyft are in the ballpark of 250 mile. I think they're actually going up, but I think you're going to see robo-taxi rides at the beginning being $2 a mile.
Yeah,
And
you've supported the comparison really well, which is the Tesla costs half as much for Tesla to make and will last twice as long minimum. So you got a 4x advantage on cost per mile right there.
and they're more energy efficient, so their electricity cost is lower.
Cost of fuel is lower, cost of maintenance is lower, resale value is higher.
Yeah, so I'm just going on, in 2018, Tesla and Elon both said 18 cents a mile for the 2018 Model 3. You push forward to the 2023 vehicle, the fictional vehicle that may become reality, that is probably going to be designed for robotaxi use. And you may get that cost per mile down below 10 cents a mile, maybe even to 5 cents a mile. If they do it right, which I tend to think. And then as robotaxi, now, listen, if everybody's getting $2 a mile and Waymo's able to keep their cost to $1 a mile, they're making money. But as the market penetration increases and the price of robotaxi rides come down, once it drops below $1 a mile, Waymo's losing money. Tesla's still making money hand over fist. And so I don't think it matters. That's why I think it does. First of all, I think Tesla's going to get there first, and I don't think it's going to be close. But I don't think it really matters who gets there first. It matters who gets there at lowest cost. And I don't see anybody doing anything that would get them close to that cost per mile.
Not if they're going to use LiDAR in, 8 spinning LiDAR devices at every corner of the vehicle plus the top. It's silly what they're doing.
Or if they make a vehicle that eventually they come around to vision, but they're EV, and they come around to a vision-based EV, but their EV only lasts 100,000 miles because they don't have the right battery tech. There's so many
hurdles. Or they have to fill the trunk with computers to run the thing.
Right. I just think there's so many hurdles that other providers would have to overcome to get to the point where, and even like the chips, like Tesla's FSD chip uses a lot less watts, which gives you more range, which means you're using electricity per mile, which means the vehicle can operate longer without having to charge. There's so many advantages there.
Because it was purpose built by Jim Keller, to be used in robotaxi. That's what it's for. And it was optimized for power consumption.
I actually, they were supposedly, if you go back to that Autonomy Day presentation, they said they were 2 years into the next generation chip.
Yeah.
And it would be ready they were halfway there, which would mean 2021. I think a decision was made at some point. The current generation chip is good enough.
Yeah.
We don't need, unless we're, the next generation chip just doesn't add enough to be worth going there.
Well, it's like any technology. There's always going to be a better version in a year, but you'll never have the cool thing if you're always waiting for next year to get the better one, right?
Yeah. So let me throw you,
pull the trigger and get it.
So let me throw you one of my fantasy models. Okay. My fantasy model is that Tesla builds its own fleet of 2170. Builds its own fleet of robotaxis. Elon had mentioned this at Battery Day, a custom fleet, Tesla's own fleet of 10 million vehicles. That was one of the questions and he said we'll probably have a fleet of our own 10 million vehicles. I think that the privately owned vehicles being put in the robotaxi network is not going to be a big share of the privately owned vehicles. Like I personally I have one Cybertruck on order, an early Cybertruck reservation and a second one. And I hope we'll probably get a Model Y from Texas in 2022 or 23. So we might have 3 in theory. And if, obviously the third vehicle is going to go in robo-taxi use, but I think by and large, the average private owner is not going to put their vehicle in robo-taxi use that much. And they're not going to make as much money from it as Tesla is going to make putting their own robo-taxi into use.
I hope Elon set a number a lot lower than 10 million. 10 million sounds like too many to me.
Why?
Early.
No, he didn't say early. He just said eventually we'd have a fleet of 10 million vehicles.
Maybe one day. Yeah. I think the usage patterns are going to be really different in different locations. So walkable cities are going to see high adoption rates of the Tesla network when it's available. Lots of European cities, major American cities, but probably not even the major cities that are fairly new in the US. So Texans are not going to be using the full self-driving network at the same rate that Londoners will, or Parisians, right? Texas is not, the cities were not designed to be walkable, right? So people are going to want to own their own vehicles so that they can hop in and go. Personal vehicle ownership is going to remain a thing in the U.S. at least outside of major cities like New York, where people already don't.
Well, let me push back on this. I wasn't expecting to go here, but let me push back on this. So, ballpark, the average American, and probably this is true for Europe and China, the average American spends about 70 cents a mile. Tasha Keeney said 70 cents a mile on their vehicle. I think number I had was 60. I think the IRS reimbursement rate is closer to 60. I forget what the number is. Okay. But if robo-taxis become really common if there's a lot of them, and the price for a ride drops below 70 cents a mile. And I should say, there's a distribution of people, right? So the guy who has 3 DUI convictions and a BMW, his price per mile is a lot higher, right? Because he pays more for insurance. The person with bad credit pays more for their financing. They're like, for me, I own my own car outright. It wasn't a very expensive car. I paid $18,000 for Volkswagen Passat. I don't drive a lot of miles though, so that kind of cuts against this. But somebody who has a low-cost vehicle that they drive 20,000 miles a year, their cost per mile drops, right? But the average is around 70 cents. There are people who are spending $1.50 a mile on owning their own vehicle because they don't drive a lot of miles and they, for one reason or another, have a high cost. As you lower the price of the robo-taxi ride down below $1.50 a mile to $1.20 a mile to $1 a mile, you start peeling off people for whom it starts to make sense to say, you know what? I don't need to own a vehicle. I will save money by riding robo-taxis instead. And there's a convenience factor that people don't realize. You said to be able to just hop in your car and go somewhere. People don't realize the convenience of dropping your own car and going robo-taxi. So for example, do you drive a Tesla or do you have a gasoline powered car or both?
I drive a 2018 Lemur Model 3 limited edition mid-range.
Okay.
It is the most efficient Tesla in the whole world. I get 188 watt hours per mile lifetime.
Okay. So think about the person who is spending, so take the person out of their gasoline powered vehicle, first of all, right? They're not ready to buy a Tesla. They've got a gasoline powered vehicle and their vehicle's reached end of life. Okay. They're ready to move on. They can either buy a new vehicle or they can ride in a robo-taxi. If they ride in a robo-taxi, they never have to wash the car. They never have to replace the windshield wipers. They never have to replace the tires. All of this is done by the robo-taxi owner operator, whether it's Tesla or the private owner.
They always have to wait.
Well, this is the point. If you can make the robo-taxi, and here's the thing. So you and I are probably
some convenience trade-off.
No, but you and I are probably somewhat wealthy by comparison to the average American. And there are a lot of Americans who are poorer than us. There are a lot of people who will make the choice.
Yeah.
That I'll wait 5 minutes for a ride. And don't forget the other side of this. You're going somewhere. You go to Walmart.
Yeah.
And if you go to Walmart in your car, I literally had this happening once. I had to park a quarter mile away from the store because the parking lot was so full. The robo-taxi drops you off at the front door. It's raining out. you have to walk out in a cold, wet rain, or, fortunately you and I don't
Right.
deal with this in Florida, but you're walking across ice to get to your car versus the robo-taxi pulls up and picks you up at the front door.
When FSD rolls out, my Tesla also drops me off at the front of the store. My Tesla also picks me up at the front of the store.
Oh.
It doesn't matter how far away it needs
You
to
still have to
park.
wait for it to
parks
come get
itself.
you. You still have to wait for it to come get you if
I
you
can
do that.
summon it from the checkout line.
Yeah, yeah. Well, I'm just saying that's for people who could afford to buy a Tesla.
Yeah, there's people today who go everywhere by Uber and Lyft, right?
Right.
So that market segment will increase. It's going to grow in size. I just try to caution people from thinking that the transition is going to be swift and decisive.
Right. No, I think that it's probably later. I don't want to say it's 2030, but I would say it's sometime 2026 to 2028 that it starts to become a lot more common. That if you're Tesla and you're producing a purpose-built robo-taxi. It doesn't have steering wheel or pedals. It costs you less to build it, and you just produce them and put them in your own fleet. It doesn't take that long to have a large fleet, and it doesn't take that long to. I see the pricing model being, you can't price it too low, because if the demand is too high for your price, if your price is too low, then demand is too high and people have to wait. And you don't want to have a network. So you have to have sort of like the pricing is optimized for the demand and constantly adjusted for the demand, so that you don't, because this happens with Uber and Lyft, right? The price is too low. Everybody wants one. This just happened to me in Las Vegas, that I was waiting for a ride and the ride never came on Lyft, and I had to switch to Uber and I got a ride. I still made my flight and it wasn't that close, but.
I thought you were trying to convince me of the superior convenience of hailing rides.
Well, no, the point is that if you have a network that the human driven Uber and Lyft is not as optimized as it's easier to optimize the network if you own if Tesla owns the fleet.
It depends where you are, right? If you live in Cheyenne, Wyoming, I'll pick on Cheyenne, Wyoming, because there aren't a lot of people who live there.
Yeah.
You're never going to get that ride in that Tesla on the network, or it'll be a long time before there's Teslas in Cheyenne, Wyoming, giving people rides.
So I get this argument a lot from people that, well, it's not going to work in rural areas. Okay, but what percentage of the world population lives in rural areas versus urban areas? And add urban and suburban combined, if you're only reaching half the population with your robo-taxi network, that's an awful lot of people.
Yeah, but it does decisively defeat the argument that nobody's going to own cars in the future because they're all just going to hail rides.
I never said nobody. Yeah. You and I are rich. If we want to keep owning cars, we can.
A lot of people are going to make that choice.
I don't want to accuse you of being rich, but you and I are probably wealthier than the average American, and we can afford to.
How dare you accuse me of being rich, Warren Redlich?
Yes. Well, you and I both own Tesla, so along with Elon. Yeah. So, but there's a lot of, just as an attorney, I'm an attorney. I don't know if you know my history. I've worked with a lot of people who don't have as much as I have.
Right.
And especially not so much my criminal defense and traffic clients, because they tend to be wealthier also, but my personal injury clients tend to be poorer. And I when I said somebody had bad credit, I had a client who had bad credit and was paying like $500 a month for a 5-year-old shitty car, right? Where I'm paying, a lot. That's the car payment. That doesn't include the insurance, right? Where I was paying $250 a month for my Honda Accord, my new Honda Accord, right? She was paying for. So
people do buy the Chevy Aveo, right?
No, what I'm saying is that there are people
they want the warranty. That's why they buy it.
But there are people who are poorer, and if you present them with the option, you can live the robo-taxi life, and it's going to save you $5,000 a year. And yes, every once in a while, you'll have to wait a little bit for a ride, but you'll never have to get an oil change, and you'll never have to charge it, and you'll never have to replace wipers or tires, and you'll never have to go to a car salesman and get ripped off by a used car salesman, and you'll never have to negotiate a loan, and you'll never have to deal with an insurance company. And there's a lot of overhead that we have with owning our own cars that we take for granted. And so there's a plus side, because your point is, well, people aren't going to want to wait for a ride. I think that the optimized robo-taxi network, people don't wait that long most of the time. And then, I mean, I'm not even including, like, I don't know if you caught my take on the Boring Company. I think if you start seeing the Boring Company build tunnel systems in cities, then the rides are going to be even more convenient, because they're going to get.
When robo-taxis are ubiquitous, the wait is short. I don't know that it's always a fair assumption to say that the robotaxis will be ubiquitous, and there will always be one a few minutes away.
Right. Okay. But I mean, I'll go back to my key point though, that I see a fleet of 10 million. A fleet of 10 million robotaxis is trivial compared to the volume. There's 2 billion cars in the world. Something like that. I mean, Elon uses that number. Maybe it's a billion, whatever. But if you have 10 million robotaxis, you're only 1% of the vehicles in the world. So the profit story on charging $2 a mile, let's say at a 10 cent a mile cost on 10 million vehicles.
You need to deploy those 10 million vehicles to markets in which they will be profitable to operate. You need to deploy them to areas where the adoption rate is high and where the revenue will exceed the cost of operating those networks.
Well, you start wherever there's Uber and Lyft.
Yeah.
And you basically displace Uber and Lyft. And Uber, this is, by the way, confession or disclosure, I have puts on Uber and Lyft that the strike date is, I think I probably jumped on this too early, but the strike date is January 2023. If I'm correct, and the profit story for Uber and Lyft vanish if the robotaxi network starts in 2022 in some form or other, and it starts to become apparent that Uber and Lyft will no longer grow. They lose money, and the story is that they're gonna grow out of their money losing. They're gonna grow into profits. If a robotaxi network starts before my strike date, and anyone on Wall Street is thinking, which is probably my biggest gamble, the profit story for Uber and Lyft goes to zero. And they become worthless.
Brace yourself. Uber and Lyft FUD is coming. Yeah, they're gonna accuse Tesla of anti-competitive practices, driving them out of business with lower cost service. Sorry, folks. When your business is disrupted by a superior product and service, you hit the highway.
Right. So
right? That's it.
So
you're done.
Just to be clear, so 10 million is, I think, more than the total number of Ubers and Lyfts, right?
That's more than the total number of Teslas Tesla has ever made.
No, I'm just saying that you keep in mind, my theory is they make 5 million in 2023, they make 10 million in 2020. I see the growth in vehicle production much higher than you see it. So I get out to 2026 and I've got 18 million vehicles produced. Bruce Burnworth, another crazy Tesla bull, thinks it's 20 million in 2025. Bruce thinks I'm wrong.
I don't know where those vehicles will be produced. Yeah, 20 million by 2025.
Well, let's talk about that. Let's talk about that. So if you take Elon's conversation with Sandy, he said Sandy was asking about the next generation factory. And Elon said, well, we got to get Berlin and Austin up and running before we think about that, or before we do that. I'm sure they're thinking about it. And once Berlin and Austin are up and running, I think the next, people are always asking me, where's the next gigafactory going to be? And I don't think the next gigafactory will follow the Austin-Berlin model. I think the next gigafactories after Austin and Berlin are going to be for that 2023 vehicle. And, Elon talks about velocity of manufacturing. He talks about, using all the space in the factory, all these things. If Giga Berlin is ultimately going to produce, let's say, 1 million vehicles a year, or Giga Texas is going to produce, say, 2 million vehicles a year because it's got Cybertruck as well, then the next generation factory producing the next generation vehicle might produce 3 or 4 million vehicles a year. I think they're actually going to use iron phosphate cells because that's what they said in the Battery Day presentation. They're going to be highly efficient, so they'll be able to use smaller packs. And so let's say it's, my vision is 4 million vehicles per factory. They build a factory in China, a factory in Texas, a factory in Europe, and they produce 12 million vehicles a year by 2025, right? And that's not counting the existing factories producing more. You could say they're not, Warren, they're not going to be able to achieve 4 million vehicles a factory. Okay, they make 3 million a factory, and they build a fourth factory. You still get to 12 million vehicles a year. Or they build, because keep in mind, CATL is going to be producing enough iron phosphate cells to supply that many vehicles. Right. And if it's, they're only going to be able to do 2 million a factory. Okay, so they build 6 of them. The cost of building the factories, the value in producing vehicles in that volume, to me, makes sense. And if I'm wrong and it takes them to 2028 to make 18 million vehicles a year, okay, I'll live with it.
If they do half that much, it'll still be pretty great.
Yeah. So that's how I think you can ultimately get to 10 million robo taxis in your fleet. Because if you only get 2.5 million a year over 4 years, you've got your 10 million, and you're still selling vehicles to customers if you do it that way. So anyway, at some point, I think you can see, maybe it's 2030, maybe it's 2026. At some point, I think you could see they might have a fleet of 10 million of their own vehicles. I'm leaving out whatever money they make from private owners putting their vehicles in the robotaxi fleet.
Yeah, by 2030, it could happen for sure. Yeah.
So if you're getting $2, let's say the vehicle gets paid for 200, let's say 150 miles a day, right? Or let's say it's going to drive 100,000 miles a year, so it gets paid for 50,000 miles, just to try to use simple numbers.
All right.
If it makes a profit of $1 a mile, then each vehicle makes $50,000 a year in profit, times 10 million vehicles is $500 billion a year in gross profit.
Yeah, you slipped in very quickly if it makes $1 worth of profit a mile.
Well, if it's charging $2 a mile and it costs 10 cents a mile, right? It's making $1. Well, sorry, if it's occupied 50% of the time, 50% of the miles.
Yeah.
There's reasons why I think they achieve more than 50% occupancy. Number one, the Uber driver has to drive home at the end of the day, right? And he has to drive out to where he's going to operate. The robotaxi doesn't have to go home.
It does have to recharge.
Sure, it's going to charge somewhere, but
it's smaller, it has to recharge more frequently.
If you have ubiquitous charging stations and you have a network that's optimizing, then it's going to go to the closest charger, and then it's probably going to go to wherever it's supposed to start the next day. And ideally, if it's Tesla's own fleet, it's going to optimize and minimize the non-occupied miles. And AI is going to get in on that too.
Yeah. Those conveniences that you said that the owners don't have to worry about, the fleet operator does. You still have to clean and maintain these vehicles inside and out.
But that's where
they smell good, or you're not going to keep your customers happy for very long.
Right, but that's where Tesloop's 18 cents a mile for the Model 3 comes in, because they had to calculate all that in, and they came up with 18 cents a mile.
Yeah.
And if you go to the future and you figure, okay, going to scale that Tesla's going to do with their 10 million vehicle fleet, which I keep in mind, this is my conservative number, by the way. I think their fleet goes to 100 million eventually.
Well,
with a lower profit per vehicle.
Maybe find out whether the 18 cents was per total mile or per revenue generating mile as one step.
I think that was per total mile. That was per total.
So it would be double that if the vehicle is only generating revenue on half its miles.
Right. No, I agree with that. But if you're getting $2 a mile and your cost is, now keep in mind, I'm saying that the 2023 robotaxi is going to have a nickel a mile cost on regardless of occupancy. So it's 10 cents a mile if it's 50% utilized.
Well, that's your assumption. You're free to make whatever assumption you like.
But you only have to get the robotaxi price to $1.10 a mile to make $1 in profit, if that's the story. But look, I'm taking rosy numbers and I get to 500 billion a year in profit, right? On 10 million vehicle fleet, making roughly $1 a mile, $1 occupied mile. You can say, all right, Warren, you're being crazy here. You got to knock it down to $30,000 a year profit per vehicle. Yeah. You're still getting 300 billion a year in profit.
It's going to be good for Tesla. Tesla is going to have the resources to do the market research to identify the places these vehicles need to be to maximize the return. And they will have unfair advantages that individuals trying to run the Tesla network business will not have. So Tesla gets to collect all the data from all the cameras, from all those robotaxis, and apply learnings to make those as efficient at generating profits for the company as possible. So Tesla's going to be fine. I worry about the individual in Ames, Iowa, who is considering buying a fleet of 20 Teslas to operate a robotaxi business. I don't have high hopes for the profitability of their company. Now, the good news for them is they can sell those vehicles. They're probably not going to have to declare bankruptcy. If the business doesn't turn out well, they can sell the cars and be okay. But there are people who will declare bankruptcy over this, I think, if they don't really do a good job of planning out the business and taking a cautious approach to
Right.
scaling.
But the major story I heard for that was people saying they put in 11 Cybertruck orders, or they put in, one guy I think told me he ordered 130 Cybertrucks. And
Yeah.
you figure, okay, I put $100 deposit down, refundable, right? And if I buy 130, if it turns out that the Robotaxi network is live when I can get my trucks,
Then
then
I've
I buy
gotten a
100.
cheap call option on
Right,
autonomy.
exactly. It's a call option on that. I haven't heard
Yeah.
people saying I'm actually, they've ordered in advance 100 Model Ys that they're going to put in the Robotaxi network when it becomes available. They might buy them then, but the problem is when the Robotaxi network becomes live.
Yeah.
Let me ask you this: what do you think happens to the price of a Tesla when the Robotaxi network goes live?
It could be wild. I do want to say that it's not certain that Tesla will allow those reservations to be sold and transferred. They may be non-transferable reservations. So anybody who thinks those are cheap call options may have a surprise when they have to actually finance the purchase of 130 Cybertrucks.
Right.
That may not be affordable for them to do. So they may have to cancel a bunch and miss out on their call option hopes.
Yeah. So,
Uh,
all right. So we've gone over 2 hours. I don't want to keep you longer than you're willing to go.
Okay. Yeah. Well, this is probably a good video for people at this point. So it's been a good conversation.
Okay, so I want to thank you very much for coming on the channel. I want to thank everyone in the chat. I want to thank the moderators in particular. I see Mark Plott and Mark Potocnik. Just want to remind people, actually, I can let you go and I could keep talking to the audience.
Okay.
Is that fair?
Yeah, sounds good. It's been a great talk. I appreciate it, Warren. Always
James,
a pleasure to chat with you.
Really appreciate this. So folks, I'm going to stay with you for a few more minutes and let James go. Really appreciate you coming on. And you're going to be on Clubhouse on Saturday?
You know, I've moderated some views tonight, but I do want to say I cannot underscore enough my optimism in Tesla going forward. So I'm still holding on to all my long stock. Tesla is the best place to invest money from my perspective. That's not trading advice.
But for people who want to hear more from you, number one, you're on Twitter. There's a link to your Twitter account in the description below. But also, I believe Alex has planned a Clubhouse event with you. Saturday?
On Saturday at 6 p.m. Join us on Clubhouse.
6 p.m. Eastern, folks. Yes.
Yeah, you can get an invite on Twitter if you @club invites.
I thought it was 8 p.m. Is it 6 p.m.?
I don't know. Maybe I'm wrong. It's Saturday night.
Yeah. Okay. All right. So anyway, James, thank you very much. I'm going to let you go, and I'm just going to keep talking to the audience a little longer.
Sounds good.
Really appreciate you coming on my channel.
Night, Warren. Okay.
Thank you.
Bye.
Okay, so it's just me now, folks. I just wanted to thank everyone. I wanted to see if I probably should have asked the chat if you had questions for James, but I think we ran out of time and I didn't want to wear him down anymore. I don't see, if you have questions for me, I'll take questions for me. Just really quick, I want to again thank the Vasa Law Firm in Sweden and all my Patreon supporters. Check the link in the description below to support this channel on Patreon. If there was a super chat, I'm sorry I couldn't see it while we were in, or super chats or super stickers. I wasn't able to see them while we were in full screen. T-shirts, the machine that builds the machine is probably at the top of the chat, and T-shirts and everything else are at elonbits.com, including the stainless steel water bottle. That was a great conversation. I hope you guys liked it. You know, it's funny because we're both bulls and we're bulls in different ways. So he's much more bullish than I am on short-term profit. And I think I'm much more bullish on long-term revenue and robotaxi and so on. But that was quite a conversation. So what are my thoughts on his model structure? Yeah, I think his model structure is great. I think everybody knows I'm driven by batteries. And I don't think he's looking at batteries the same way that I am. And I'm not saying he's wrong. He made a really good point that JB Straubel used to say, well, Tesla Energy is going to grow 40% a year, and then it didn't. Yeah, I don't think we got into stock prices. We probably should have gone there. I was always that good at not wearing people down. I don't know if I wear people down. I feel like I started to wear him down and I wanted to let him go. Oh, why no chat? I'll be traveling on Sunday. So I don't believe I will be able to do the live stream on Sunday. Certainly not at my normal time. James seems like no, okay. So I think in short term, I think James actually has higher expectations of profit than I do. in the long term, I think that his long-term view, he's still very bullish in the long term. I just don't think he sees the same growth that I do. And I'm not convinced he's wrong. I mean, I believe in my story. I think I explained the story fairly well. And I think we just got to the point where I was wearing him down and I wanted to let him go on that. My water bottle is 50 ounces. All right. What do I think about Apple as competition? I don't think Apple is competition at all. Let me know when Apple makes a car. I don't see Apple anywhere close to being competition for Tesla. If the day comes out, they roll like last thing they rolled out was like a tag you put on your luggage so you could find your luggage. Woohoo. I like Apple. I have an iPhone. My whole family has iPhones. My whole family has Macintosh computers. This computer is a Windows machine. That's a long story, but I love Apple, but I don't think they're going to make cars. Can you explain how Monster FSD cash flow will be? Well, I think the cash flow from FSD is really robotaxi. I think that if FSD delivers and is really good, then maybe it increases the take rate, and that increases the average selling price of a Tesla vehicle, and that increases revenue. Yeah, I'm not sure what's going on with Jessica. Jessica, I made you a moderator. Thank you for joining the chat. For those who don't know, Jessica Kirsch is in the chat. Jessica has a YouTube channel. She is more of a SpaceX person, but she's here with us. And truthfully, I'm really more of a SpaceX person than a Tesla person. I just end up talking about Tesla more because people are more interested in Tesla. Really a boring company, Neuralink person too. If 4680 are not in Plaid, then the smaller batteries may now be tabless to minimize heat. No, the smaller batteries don't generate heat because they're smaller. It's the size of the battery that generates heat. So the 1865 cells are really good if you don't want to generate heat. Warren, does Elon Bits accept PayPal? I actually don't know the answer to that question. I'm pretty sure it does. I should know the answer to that question, but I'm pretty sure it does. Any idea how large the Cybertruck battery is going to be? I've seen estimates as high as 200 kilowatt hour pack for the tri-motor. I think the tri-motor is probably going to be 120 to 150 kilowatt hour pack, and the single motor could be as low as 80 kilowatt hours. Is Tesla a higher percentage data company or manufacturing company? Interesting question. I don't look 20 years ahead. That's too far for me. How much will it cost to charge my Cybertruck? And I don't know the battery size. Yeah. I guess it depends which Cybertruck, but my ballpark guess would be Cybertruck's going to have 100 to 120 kilowatt hour pack. It depends which one you get. What are my thoughts on how the Roadster will be after the Plaid? So I think the Roadster will be insanely fast. I think the Roadster is going to have a structural pack with 4680 cells. I think the Roadster is going to be extremely lightweight. The Roadster will have the Plaid powertrain with, I think Elon said it would have might go to 25,000 RPMs instead of 20,000. So it might have 1,500 horsepower instead of 1,000 horsepower. It's going to be a crazy vehicle. Do I think 1 million vehicle deliveries are possible in 2021? I think it's possible, but not. I think 900,000 is my number. I agree with James that 920,000 is a good ballpark number. Could be 850, could be 920. I don't want to say 1 million's out of reach. It all depends on how quickly they spool up Texas and Berlin, and also if they're able to spool up production of Model S and Model X. Because if Model S and Model X deliver in higher volumes, they start delivering 1,000 a week before the end of the year. That pushes the numbers up quite a bit. I don't think Plaid battery pack actually matters that much. It's an 1865 cell. I think the future, it matters, but I think the old Model S and Model X pack was outdated, and they brought it closer to the Model 3, Model Y pack. I know you don't have short predictions, but Wall Street is finally getting the point before Q2 earnings. So do you agree? I don't think Wall Street gets Tesla yet. I don't think they're going to get it yet. No. Jessica, please ignore people who are negative. There's always people who are going to be negative. There's always people who are going to be positive. Don't worry about that stuff. Optimal supercharge is 15 minutes. I think that supercharging will get faster. I think for people who didn't catch it, the Model S Plaid is going to do 187 miles in 15 minutes. That means the Model S long range is going to be like 195 miles in 15 minutes. And then they're going to increase the wattage of the chargers. It's going to go faster. I don't make price predictions as short as the end of this year. So, all right, it's 11:20. I really should wrap this up so I can get a good night's sleep because I'm going to have a big day tomorrow. Carbon wrapped rotors. The Plaid Cybertruck will have the carbon wrapped rotors. I'm sure. I'm fairly confident of that. So I want to thank everybody for watching again. The t-shirts and the merch like the stainless steel water bottle at elonbits.com. Please support this channel on Patreon. Please check out Jessica Kirch's channel on YouTube. And thank you very much for watching. I have to wrap it up. So thanks very much for watching, everyone.